Welcome to the Way of the Renaissance Man podcast and lifestyle website starring Jim Woods. We hope you enjoy this reprise interview of Jim with The Watch List on TD Ameritrade TV.
But for now, let's get right to our deep dive on the sharing economy with Jim Woods, editor of the Intelligence Report. Jim, thank you very much for joining us.
Hey, thanks a lot, Shawn. Appreciate it.
So you wrote a very interesting article, and I think anybody who wants to kind of understand how the sharing economy works should take a look. But it was an article you wrote in 2015 that was in TechCrunch titled "The Battle Is for the Customer Interface." So what do you mean by that? And just give us what at the high level, what's the battle for the customer interface mean?
Yeah, well, actually, I wish I had written that article. It was actually written by a man named Tom Goodwin. Yeah. So no, I mean, I as much as I'd like to take credit for that article, I must give it to Tom. But basically, he said something that was really good. I'll quote him direct. He said, "Uber is the world's largest taxi company, but it owns no vehicles. Facebook is the world's most popular media owner, but it creates no content. Alibaba is the most valuable retailer, has no inventory, and Airbnb is the world's largest accommodation provider, but it owns no real estate." And something's happening here. That was the kind of the genesis for this whole thing. And that is really been, I mean, think about it for yourself. I would suspect in the last week or so, you've at least ordered an Uber. You've probably ordered something from Grubhub. You probably ordered something on your phone and interacted with someone. If not, maybe gone on Match.com and looking for a date or something. But that's the kind of interface economy. That's the new thing here.
And so I think that's interesting, and that is that you think about it, not long ago, a lot of investors were questioning Facebook and that, we don't even get how Facebook makes money. And now you look at what Facebook's doing now, and you look at the incredible revenue growth. But so what do you think this means for maybe some of the incumbent companies in that industry? Does this really change the investment outlook and the profitability of some of those companies that have been in those industries for years and years?
Well, I mean, Facebook's a great example of something that caught fire like pretty quickly, actually. And I was actually someone who was a bit skeptical about the IPO on Facebook, even though I had used Facebook quite a bit. And of course, they did have a problem with their IPO rolling out, but that was more of a logistics thing than anything else. The interesting thing is people, I think people are hesitant to adopt these ideas from an investment perspective. Because, I mean, especially like something like Uber and Lyft really haven't done anything since their IPO. But my idea here is to look at the companies that are actually, or one company in particular, that's incubating these ideas. And that company is Interactive Group, Interactive Corp, as ticker symbol is IAC. Now, a lot of people don't really know too much about IAC, but they're the impetus behind Match. They brought about 10 different interface companies into the market. And they've created tons of wealth for shareholders. For example, over the last 3 years, the IAC is up about 345%. Now, if you go and look at the technology spider, XLK, that's up about 70%, which is great. And the S&P is up about 30%, but that's not 345%. So this is the kind of upside we're talking about. That's why I'm so bullish on IAC. Plus, it's at the helm by Barry Diller, who we all know is a brilliant genius businessman. And I actually have a rule of investing, Shawn. I never bet against anyone who's married to a European princess.
I think that's an interesting thesis. But if you invested in IAC based off of that, you're up 345% in 3 years. But I guess the question begs itself: you get that kind of return, 345% in 3 years. That's incredible. Are we starting to get to maybe the point where we've gotten all we can out of the sharing economy, or is there still plenty of growth ahead? What do you see? What's the growth outlook for the sharing economy?
Yeah, that's a great question. I mean, you'd say, okay, look at all those gains. Are we still going to get these kind of gains? But consider this: research firm PwC, they said their estimate is that in 2014 the sharing economy was worth about $15 billion. By 2025, which is only 5 years from now, they're estimating that the whole economy, the sharing economy, will grow to $335 billion. Now that is plenty of headroom to go. We got plenty of upside. IAC is still able to incubate these companies. The most recent one that I love is Match. I mentioned earlier, Match.com, up 100% year to date, and that's something that my subscribers have been benefiting from. So, you know, there's always going to be hits and misses in this kind of industry, because some companies are going to get it right, some companies aren't. But one thing I like about IAC is it's kind of like it's a virtual ETF for these interface companies in the sharing economy. So that's you're getting diversification in that as well as the upside.
And that was kind of going to be my next question, and that is, how do you view going out there? And now I think some of these companies in the sharing economy are starting to get out there, and they're publicly available, so you can go out and buy shares in the open market if you want to. How do you view having to maybe be a little bit more of a selective stock picker in the sharing economy versus looking at something like IAC and just using that as kind of like the way you described it, a way to get a diversified exposure to that entire industry?
Well, I go back to the old school kind of way of picking stocks, and that they have to have some kind of an earnings backbone in order for me to like them. So right now I don't like Uber and Lyft because they don't have that, even though those are premier sharing economy type stocks. And maybe they will get that at some point, but so far they don't have it. So I'm gonna kind of hold off on that. Match does have incredible earnings, incredible growth in apps like Tinder and OkCupid, things like that. So those are metrics that are growing and that you can count on. So that's what I would stick with as an individual investor. If you want to diversify. Also, I like Etsy too, which is not part of the IAC group, but is another sharing economy stock. They recently made some changes to their platform, free shipping on $35 and more orders, and also they've been able to change their advertising platform. Now that cost them a little bit in their last quarterly report, but they still are making money and they still are earning. And I think that kind of niche craft area is another area that it's another trend that the economy is going toward. So I like that. So, but I mean, the bottom line is you need to look at these companies and say which ones are earning money, which ones aren't. And if they're not, then you need to look at something like IAC, which is earning a bunch of money, and they have that diversification that investors can get exposure to this burgeoning area.
Yeah, that actually is a very interesting thesis. I think it gives investors a lot to think about. So we have to leave it there, though. Thanks again for coming on, Jim. That was Jim Woods, editor of the Intelligence Report.
Thank you for listening to this reprise interview of Jim Woods with The Watch List on TD Ameritrade TV. For more great resources, please visit the website at wayoftherenaissanceman.com.